Good day, everyone. This is your European Open briefing for Wednesday, July 20th. My name is Michael Florentiades. I'm the chief economist here at xm.com, and here are the key points you should know about today. The dollar index is trading at a 4-month high. I think it's the familiar theme of policy divergence, and we'll talk a little bit about that in a second. Sterling loses, perhaps on an IMF World Economic Outlook forecast, saying that the Brexit is going to have an effect on the global economy. So it's not something that can be looked over, let's say, or business as usual. And the yen is also down as analysts are predicting Bank of Japan action next week. Now, the euro-dollar, euro is trying to hold on to 110 ahead of the European Central Bank meeting tomorrow. And we also have UK employment shortly after European Open, Eurozone consumer confidence towards the European close, and crude oil inventories out of the United States. Now, the dollar index is trading above 97. As we said, it's a trade-weighted index with 6 major currencies. It is at its highest level since March, so it's a 4-month high. Why? Overall, US data have been coming in strong. Jobs, retail sales, inflation, housing, industrial production have been decent, even if some measures of consumer confidence were disappointed. I also think that the dollar is standing tall above the Brexit troubles that are plaguing Europe for the moment. Now, the US data doesn't mean that a rate hike is imminent, of course, but a December hike and even possibly a September hike are now more probable. Like, they should come into the market's radar, although September is looking quite improbable, but if we keep getting good data and markets are okay, why not? And financial markets have not been hit by Brexit as much as feared before the actual referendum. Actually, it has been quite the opposite. We have hit all-time highs, especially in the United States. So something to think about there for the central banks. Sterling was under renewed pressure as the IMF warned about the economic fallout of Brexit and cut its global economic growth forecasts. The new UK Prime Minister Theresa May is going to meet with German Chancellor Angela Merkel, and the takeaways from that meeting will be absolutely key. We have to say that sterling is looking bearish. There's almost a unanimous call that sterling is going to go down, but you should be careful in this kind of unanimous, let's say, or consensus views. Quite often the contrarian view might win, and it may, if the positioning is extreme, then that may make it a bit more difficult to push sterling substantially lower. So something to keep in mind, despite the bad news that we are getting for the UK. Now on to euro-dollar. The battle for 110 is well and truly underway. It has been interesting because generally the euro has held the 110 level since February. So it could be a development, if we break 110, it could be a development that opens the way for a retest of the 105, 104 low. So the ECB is expected to hold during tomorrow's meeting. Maybe it's going to announce some just technical adjustments to its QE rules, just to allow it to buy certain, like a different mix of bonds. We'll have to see about that, because even that kind of an adjustment could cause big ripples in the market. The Eurozone economy is also to be affected by Brexit, not as much as the UK, but it will shave something of growth. And it will be the first chance to see what the ECB's view is of the post-Brexit world. It's the first ECB meeting since after June 23rd. But I have to caution that we are not getting any new forecasts. We have to wait for that in September. So we are going to get, a first reaction, but not a lot of detail, and that detail will have to go wait for September. On to the calendar, we are looking at the UK unemployment. It's expected to hold around 5%, but again, it's pre-Brexit data, maybe not as important. But maybe more importantly, we have the Eurozone consumer confidence flash, and after the big miss by the German zoo survey yesterday, the Eurozone consumer confidence is going to be watched closely for signs that Brexit is having an effect on consumer confidence, etc. The other item on top after the consumer confidence is coming in quite late in the European day, by the way, at around 1400 GMT. So we will have weekly oil energy inventories in the US. We are looking for a big draw around 2.1 million barrels in crude oil, but more or less flat gasoline stocks. And I would particularly note that the August and September WTI contracts, we are near the switch when we are changing the benchmark contract, have about $1 difference. So if you notice the current month contract, the current futures contract a little bit higher, keep in mind that the September contract was about $1 higher than the August contract. That's all from me for today. Thank you very much for watching and have a great day.